Imagine this, you invested $1,000 in Nikola back in 2018. How much do you think that investment would be worth today in March 2024? In this hypothetical scenario, your investment of $1,000 would be worth a mere $68 today. That's a staggering 93% decrease from your initial investment. Now let's take a slightly different route. Suppose you invested that same $1,000 in the middle of 2020. Fast forward to today and you'd be looking at an investment that has dwindled by a shocking hundredfold. What led to this dramatic turn of events? The answer lies in Nikola's financial situation. Rewind to 2020. Nikola's stock value peaked mid-year, marking a sevenfold increase from 2018. Yet the company had no revenue to its name. This surge was driven purely by investor expectations, fueled by misleading statements from Nikola's chairman about their electric truck products. Fast forward to 2023, Nikola's revenue was $36 million, a sharp decline from $50 million the year before. The revenue breakdown for that year was 84% from trucks and 16% from services and others. However, the company's net profit for 2023 was negative $966 million. This loss has progressively grown over the years. In 2018, the net profit was negative $64 million, and it has increased every year since, culminating in the staggering loss in 2023. The total assets for 2023 stood at $1,275 million, slightly higher than the previous year. The net assets for the same year were $719 million, compared to $526 million in 2022. Now, these figures paint a clear picture of Nikola's financial health. But to understand why this is the case, we must delve deeper into Nikola's financials. Let's begin by examining Nikola's revenue. In 2023, Nikola pulled in a revenue of $36 million. This, interestingly, is a step down from the $50 million earned in the previous year, 2022. Now let's take a moment to rewind to mid-2020. This was the period when Nikola's stock was at its peak. It was soaring, reaching heights 7 times higher than it was in 2018. But here's the catch. At this time, Nikola had not generated any revenue, not a single dollar. So what was fueling this meteoric rise? Well, it was the investors' expectations. These expectations were based on the chairman's statements about Nikola's electric trucks. But as it turned out, these claims were not entirely true. Let's now delve deeper into how Nikola's revenue was structured in 2023. 84% of it came from truck sales, while the remaining 16% was from services and other miscellaneous sources. Despite this diversity in revenue sources, Nikola's financial health was far from stable. The company's inability to turn a profit, coupled with a declining revenue, paints a concerning picture about Nikola's financial health. As you can see, the company's revenue has been on the decline. Beyond revenue, it's crucial to examine other indicators of Nikola's financial health. Let's delve into the details. Nikola's net profit in 2023 was a staggering negative $966 million. This loss has been growing year on year, with losses of $64 million in 2018, $105 million in 2019, $398 million in 2020, $690 million in 2021, and $784 million in 2022. Moving on to assets. Nikola's total assets amounted to $1,275 million in 2023, showing a slight increase from the previous year's $1,237 million. The net assets for the same year were $719 million, a sharp rise from the $526 million in 2022. As for liquidity, Nikola's current ratio in 2023 was 2.2, up from 1.14 in 2022, indicating an improvement in the company's ability to cover its short-term liabilities with its short-term assets. The quick ratio, which measures a company's ability to meet its short-term obligations with its most liquid assets, also increased from 0.85 in 2022 to 1.96 in 2023. However, these slight improvements in liquidity and assets do not mask the fact that Nikola's losses have been mounting over the years. The company has been bleeding money, and the increasing net loss is a clear indicator of the financial struggles Nikola is facing. These numbers paint a picture of a company grappling with financial challenges. The increasing losses and the modest improvements in assets and liquidity ratios highlight the financial health of the company, or rather, the lack thereof. The question now is, can Nikola turn things around, or will these financial challenges prove too great to overcome? That's a question only time will answer. Cash flow and efficiency are also important factors to consider in assessing a company's financial situation. Let's take a closer look at Nikola's cash flow and efficiency for the year 2023. Starting with cash flow, Nikola's operating cash flow, or OCF, for 2023 was a negative $496 million. Moreover, the company's free cash flow, or FCF, for the same year was a negative $617 million. These figures reflect a decreasing trend that has been apparent since 2018. Each year, both the OCF and FCF have continued to fall further into the negative territory, indicating a cash flow problem that Nikola has yet to overcome. Now let's turn our attention to efficiency. Two key indicators of a company's efficiency are its inventory days and receivable days. In 2023, Nikola's inventory days were 128, a significant decrease from the 301 days in 2022. This suggests that Nikola was able to reduce the time it took to sell its inventory. However, the company's receivable days for 2023 were 253, an increase from 234 days in 2022. This indicates that it took Nikola longer to collect its accounts receivable. While the decrease in inventory days is a positive sign, the increase in receivable days is concerning. These figures suggest significant inefficiencies in Nikola's operations. The company is taking too long to convert its inventory into sales and its receivables into cash. These inefficiencies can have a negative impact on a company's cash flow, as we've seen with Nikola. In conclusion, Nikola's cash flow and efficiency metrics for 2023 paint a concerning picture. The company's negative operating cash flow and free cash flow, combined with its high receivable days, suggest that Nikola is struggling to manage its cash effectively and operate efficiently. These are important factors for investors to consider when evaluating Nikola's financial health. Finally, let's discuss Nikola's return on equity. A handy tool we can use is the DuPont analysis, which allows us to break down the ROE into three components: net profit margin, asset turnover, and asset to equity. The net profit margin measures how much profit is generated from each dollar of revenue. For 2023, Nikola's net profit margin was a staggering negative 2,683%. This indicates that for every dollar of revenue, Nikola incurred a loss of $26.83. Next up, we have asset turnover, which shows how efficiently a company uses its assets to generate revenue. In 2023, Nikola's asset turnover was a mere 0.03. This means that for each dollar of assets, Nikola was only able to generate 3 cents worth of revenue. Finally, we look at asset to equity, which indicates how much assets are financed by equity. Nikola's asset to equity ratio in 2023 was 1.77, suggesting that just over half of its assets were financed by equity. Comparing these figures to 2022, we see a consistent story of financial struggle. The company's ROE was negative 149%, with a net profit margin of negative 1,568%, an asset turnover of 0.08, and an asset to equity ratio of 2.35. In conclusion, a careful analysis of Nikola's financials could have prevented the unfortunate loss of investment. The company's negative net profit margin, low asset turnover, and high asset to equity ratio are all red flags that could have signaled potential financial distress. Always remember to do your due diligence before investing. A deeper understanding of these financial metrics can help you make more informed investment decisions and potentially avoid significant losses. Thanks for watching, and feel free to comment the companies you want us to analyze in our upcoming videos.